Hello, ladies and gentlemen, Greg McCloskey with a Kickstart video. Today's date is December 20th. I think I called yesterday December 20th all day long, but anyway, it is December 20th today. And in the Kickstart video, I take a look at three of the major currency pairs of euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. Looking at the euro versus US dollar from the hourly chart, the big move to the downside this week was on the FOMC rate decision. We moved below this swing area right here and went down and moved down toward our low price from the month of November. That came in at 1.0332. We did find buyers early against that level, and we rotated to the upside in the Asian session into the early European session yesterday. But then we found resistant sellers against this old low right through here at 1.0424, and we started a rotation back to the downside. That moved to the downside again, tested the low price from FOMC day and also the low price going back to here. Found support buyers and trading here today and rotated back to the upside. So where do we stand? Well, first off, this 1.0405 level, to understand that, you have to go to the daily chart, and we take a look at the range of the price action since the September 2022 low to the 2023 high. The 50% retracement of that move to the upside comes in at 1.0405. So going back to our hourly chart, that's this level right here. And as you can see, the price is just below that level at, trading at 1.0388, went up to probably around the 92 or 3, maybe even close to the 104 level, but before rotating a little bit to the downside. So be aware of that level. Also on the top side will of course be the low price going back here, and the high price that we saw in trading yesterday. That level comes in at 1.0424. So those are the levels that we need to get to and through on the top side in order to increase the bullish bias. If we can't do that, then the bias remains more to the downside. So be aware of that. We'd probably still be looking to break through, or we would still be looking to break through the low price from the month of November. By the way, the low price from the month of November would take the price to the lowest level, or breaking below that level would take the price to the lowest level since December 2022. So skip 2023, go all the way back to December 2022. That's what that break would mean. Let's take a look at the dollar versus yen next. And I'm going to start by looking at the daily chart. When you take a look at the daily chart and trading yesterday, sharp move to the upside that came after the Bank of Japan decision, which was deemed to be more dovish, and that moved up the price up to this the low of the swing area right through here, where we had a number of different swing lows and swing highs going through this area right through here before moving to the downside. Came back up to that area in trading yesterday and again today, 157.66 to 158.419. But the price starting to move down. There was some chatter from the finance minister Cato, which some verbal intervention within the yen, saying, it's one-way markets are not good. And we've had a one-way market to the downside in the yen, to the upside in the dollar versus yen. So we did see some rotation to the downside through here, and that continued into the U.S. session, or early U.S. session, at least with the price moving just below the old high price that we saw going back to this day right here. That level comes in at 156.74, and you can see we're trading above and below that level currently at the moment. That's going to be our barometer for this currency pair in trading today. Stay above it and create more upside momentum. We could see a rotation back toward our high prices, conversely move below it, and we could see a rotation back toward this old high price, which would make sense at the 155.88 level. Then the traders, both the buyers and sellers, have a decision to make at that level. So be aware of that. Right now, we're at a neutral level where the market has to decide which way it wants to push next. Finally, let's take a look at the sterling versus US dollar. This currency pair moved sharply in trading yesterday. There was a dovish, unchanged policy from the Bank of England. In this case, they had 3 dissenting votes from members looking for more cuts. That sent the pair from the 100-hour moving average, that's this blue line up here, all the way, and this swing area, by the way, all the way back down toward a low price that we saw in the month of November. We moved a little bit below that level in trading here today, but could not sustain the momentum and started to rotate back to the upside here, and taking back some of the breaks of the swing levels going going to the that were in the downside during the month of November. Those levels included the 1.2506. We're currently trading above that. We're currently trading right around the other low swing level right here at 1.25237. Get above that level with more momentum. We start to look toward this swing area through here, which comes in around the 1.25655 level. Alternatively, if we cannot get above this 1.25247 with any sort of momentum, then a rotation back down toward the low prices reached today and reached back here in November would be the order. And if we break below those levels, going to the daily chart, that would take us have us looking toward the 61.8% retracement at 1.2423. We have traded lower in 2023, just for your guide. Back here in the month of, in the month of April, the low price reached around the 1.23 level. So that would remain a key target on the downside for the sterling versus US dollar on a break lower, break back below the low price from November, and a break below the 61.8% retracement from 1.2423. So there you have it, a look at three of the major currency pairs from a technical perspective to kickstart your day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.